Hello, everybody, and welcome back to this financial analysis channel. And today we are going to be looking at a company called Renergen. So this is another company who are involved in helium and LNG producer. They've got production rights to a unique renewable gas resource at its Virginia gas project. And a little bit of information on your screen about the Virginia gas project, home to living microbial organisms that produce a constant renewable source of gas, etc., etc., etc. So what we are going to do today is look at the financial analysis, the financial statements of this business. Now, remember, if you are looking to invest in this company, then you need to do more research on the actual company and the story and the product and the market, etc., etc. So all we are doing is looking at the financial analysis, and this is at the request of Cosiwanto. So here is the financial analysis. Please don't forget to like, share and subscribe to this channel if you like what we are doing. We're really helping you as part of your fundamental financial analysis, your fundamental analysis of a business. We're helping you to read and interpret the financial information and to give you just some of the key salient numbers. It's worth bearing in mind, though, when we look at a mining company, especially if a mining company is very much in the early stages of exploration or in the early stages of establishment, then there's going to be lots of numbers which are maybe don't look so good at the beginning but will come good. Okay, so this is not the only thing to look at. All we're doing is giving you the financial analysis that will help you make your informed decision. So with that in mind, let's have a look at Renergen. Here they are. And we've got the integrated annual report for 2021. So lots of information about the business. And if you are interested in these, this is available on their website. Definitely worth looking through all of the information. Talks about the strategy, what they're up to, who the directors are, their experience, and then we finally get to the consolidated financial information. So here we have the financial statements, and we're going to start off with the income statement. Let me just get to the income statement. Here it is. So here is the income statement. So the first thing we notice for the income statement is that the revenue is relatively low. So we are dealing, just so that we're absolutely clear, we're dealing in thousands of rands. So this is South African rand. So here we go. So 1.1925 thousand. So that's about 2 million rand. So 2 million rand. The cost of sales is 2.8. So they are operating at a loss. Now, don't forget, this is very much early, early stages. So that's not to say that that's always going to be the case, but what it's really telling me is that they're doing a little bit of production, but it's very, very much early stage production here. The cost of running the business, the cost of running their facilities, 45 million. So they are making a loss. There's a little bit of interest expense, interesting enough. So that suggests that there's going to be some debt sitting on the balance sheet, and they are operating at a loss for the year, 42 million. Okay, a little bit less than the previous year. So the loss is coming down, going in the right direction. Again, you could say, well, the revenue has come down, but these are relatively small numbers, so they're pretty meaningless at the moment. So they haven't really started to ramp up the production, start to take, produce this helium and take it to market as yet. So at the moment, the income statement is saying that they are operating at a loss, and that loss is really driven, as we say, by the fact that it's the cost of running their facilities. Looking at the strength of the balance sheet. So here is the balance sheet. And we look at the non-current assets. So the non-current assets are the things that we need to run the business. That's these numbers up here. So we have got lots of PP, property, plant and equipment, you'll notice here. So this is the total of the non-current assets. Lots of property, plant and equipment, which is what you'd expect from an exploration company. And you've also got some intangible assets, which will be the costs of some of the exploration and evaluation costs. So you're looking around for new sources of helium, for example. You're exploring around, you're actually allowed to kind of capitalize those costs, stick them on the balance sheet, and then when you start to extract, you start to write off those costs against the costs or the revenue from the extraction. In terms of the current assets, so it's just scrolling down, what we see is lots of cash. So 130 million, 131 million of cash compared with 140 million in the previous. And if we compare the total current assets, which is 780 million, and we compare that to the current liabilities, we can see that liquidity is not really an issue for them. Sorry, the current liabilities, which are 32 million. So so just to summarize, the current assets, that's this number here, the current assets of 155 million is well in excess of the current liabilities, which is this number here of 32 million. So liquidity is not a problem for these guys. They've got lots of cash. You'll notice that they do have some debt sitting on the balance sheet. So that is, let's just highlight that for you. So these are the non-current liabilities, the things that we own, we have to pay later on. The big number there is the debt. Interesting that we actually have an exploration firm. So typically exploration is not funded through debt. So, for a lender to lend money to these guys, they have done a lot of due diligence. They'll be feeling pretty confident with them. So that would, again, give me a reasonable degree of confidence. So the equity, you'll see the equity, funnily enough, on the asset side. So the total equity, these guys, basically the summary of this numbers are that they've raised 450 million rand. They've spent about 250 million in investing in kind of in this exploration, and there's probably still a little bit of cash burn to go before they actually start to strike gold and turn a profit. If we go to the cash flow statement, so this is going to be pretty important, the cash flow statement, here it is. So we see that they are, they're burning cash, and they're burning cash for about 25 million, so down from the previous year of 37 million. So a cash burn, but again, that's what we'd expect. And then they are also investing. So there's 200 million being invested in property, plant and equipment, and also these intangible assets. This will be the exploration and evaluation costs. So again, more on note 4 if you wanted to look into that. And then down the bottom, we've got how they're being financed. So you'll notice that they've been increasing their borrowings. So here's the borrowings and more borrowings. Interesting enough, share issues in the previous year, but no share issue in this year. So if we think about that, so what's really happening here is that, if you're exploring for helium, for example, and you're not sure if something's there, the banks will say, we're not going to lend to you. And therefore the equity investors are lending to you and taking on a high amount of risk. Once you've found your helium and you say, right, I found it, all I need to do is to get it out, suddenly the banks are more likely to lend against that future cash flow. So what's interesting here is that the company is saying, look, we do still need to raise money. We still haven't quite got the the helium on stream, but it looks to me like from the numbers that these guys, they found the seam. They're borrowing the money in order to extract it, and so we should start to see the revenue starting to increase, the profitability coming through, and and for this company to start to realize its inherent value. So there is the cash flow. A quick summary: cash at the end of the year, 130 million. Don't forget 130 million on a 25 million of cash flow. Sorry, cash burn means that they got plenty of cash in the bank. They're not really going to have to go and spend a lot more. You know, they shouldn't really have to raise a huge amount of more debt or any more equity in order to survive, as long as they can start to get that revenue coming through from their exploration. So there we go with the financial analysis. Let's see how their share price has been performing. So here we see it's been bouncing around a little bit. In fact, recently it's actually been coming off the boil. I don't know exactly why that is. So you might want to do some investigation into kind of the latest company reports. If you know or you've got some information on that, then please do post it in the comments. But what we do see is that the value of the company is at about 2.2 billion rand. So just to put that into some form of context, there's no PE ratio because there's no earnings, obviously. So that is, you know, and it's 1,000 times sales, and so they're trading at, you know, a significant premium to the size of the balance sheet. Balance sheet is about 200 million. These guys are worth 2.2 billion. Therefore, it's about 2 billion of inherent goodwill. So looks to me like these guys are, you know, there's good news coming through. It's starting to be reflected in the share price. It looks to me like it got ahead of itself. So it looks to me like, you know, at this point here, maybe the share price got ahead of the good news and has since taken a small correction. And, you know, where does it go from there? Well, you know, if we knew that, we wouldn't be sitting here doing these videos. So good luck on that. Hopefully that you found that a useful analysis, give you a flavor for the numbers that sit behind the company. And if you want to, you know, please do like, share, subscribe to the site, to the channel. If you've got any other companies you'd like us to look at, then please do just leave a comment or a note on the in the comments box. So thank you very much indeed for taking the time to watch this video, and I will see you on the next video.